Okay, so one of the trading analysts in my Discord named Kruger found an absolutely amazing trading strategy. When he first found it, it performed extremely well. So well that he had to backtest the strategy himself to see if it actually was as good as he thought it was. He himself personally took tons of trades within real markets to see how this strategy would perform in the long term. The results were absolutely incredible.
That's incredible. It's incredible!
The moment he realized how powerful this strategy actually was, he instantly shared it with me and all the premium members in the Discord. And when I say this thing is powerful, it's powerful. So good that a robot from the year 2075 with top-of-the-line weaponry would personally fly down to planet Earth just to destroy it with a 20-ton nuclear bomb because of the pure chaos this strategy would cause. I'm gonna have to edit this in now, huh? I swear I spend way too much time on these videos. Now, we were originally going to keep this strategy between just us and the premium members in the Discord, but we decided, f it, let's share it with the whole community. So here we are, sharing it with the whole community. Now, I'm going to share how this strategy works, all the settings you need to know, and we'll also be sharing the backtest results with you at the end of the video. Let's get straight to it. Alright, to start us off, we're going to go over the settings of the strategy. The strategy utilizes the Fibonacci retracement tool. So let's start there. Click the Fibonacci retracement tool, place it on your chart, click on it, then click settings. Have 0, 0.88, 0.382, 0.5, 0.618, 0.786, and 1 enabled. Also, feel free to pause the video and make sure to have all the same colors as mine so you know what lines I'm talking about when we go over the actual strategy later. So now that we have all the settings in place, it's now time to go over the actual strategy itself. We will be trading with Forex as that's what all the backtests and trades were taken on when testing this strategy. Speaking of Forex, if you need a broker for Forex, I would definitely recommend Hangertrade as that's what I personally use myself. They have some of the lowest fees on the market and that's really saying something. Their spreads go as low as 0.0 pips. And if you're an absolute maniac, you can use up to 500x leverage with them. 500x. They also have negative balance protection, and to top it off, they have a 100% deposit bonus. So if you deposit, say, $500, an additional $500 will be credited to your trading account. How cool is that?
How neat is that? That's pretty neat.
I can sincerely say they are one of the best brokers out there. If you haven't tried them yet, I would definitely recommend it. You will not regret it. Now, let's go over how to actually calculate entries with this strategy. So this first example is going to be for a long trade. This strategy has 4 parts. I'm going to call them A, B, C, and D. The very first thing you want to do is find a large bullish trend moving upwards. Once you find one, grab your Fibonacci retracement tool and draw a Fibonacci level from the bottom to the top of the trend like this. This creates step A. Once you have drawn your Fibonacci levels, you're going to draw up a rectangle between the 0.5 level to the 0.618 level. This is a very important level. In order for this to be a successful trade, we're going to need price to enter into this rectangle area and not go past it. Price should come down and reach this rectangle. If price goes out of the rectangle or creates a wick that goes outside the rectangle, the trade will no longer be valid. We want a full candle or at least a wick to enter into the rectangle and not go past it. Once this has been done, we have successfully passed step B. If step B is confirmed, we will then draw another rectangle from 0.382 to 0. It's the same type of idea. We want price to enter this area without going past the 0 level. If it does go past the 0 level, the entry is no longer valid. This creates step C. If all the conditions are met from every single step, we will enter once price reaches the 0.88 level. This is step D. Price should come to this level, stop, then reverse and head towards your take profit, which should be placed at the top of the original move. You will be setting your stop loss right below the low of the entire move as well.
Then wait for that profit, baby.
Here's how you would do a short trade. Find a big trend moving downwards, grab the Fibonacci tool, mark from the high to the low. Draw a rectangle between 0.5 and 0.618. This is where price has to get to and reject. If it goes past this rectangle, it's an invalid entry. Once it reaches, then draw another rectangle area from 0 to 0.382. Price then has to head here, reverse yet again. If it goes past, it's a false signal. Once it reaches this area, wait for price to come all the way back up to 0.88. This is where you enter your trade. Set your take profit at the low and set your stop loss right above the high.
Then wait for that profit, baby.
Okay, so that's the strategy summed up. Let's go over a real trade example that I took in a real market so you can get a better understanding of how to use the strategy. Then we'll go over the backtest results and some extra tips you can use to make this strategy even better. Here's the perfect example of a long trade on USD JPY on the 30-minute time frame. So here you can see price made an uptrend. So we grab our Fibonacci tool and drag from the low to the high of the move. After that, we want the price to come to the 0.5 and the 0.618 area, which it ends up barely wicking in, but it still counts as a successful signal. Next, we want price to come to the 0.382 to the 0 area, which it does. Then finally, we want price to come all the way back down to the 0.88 level to be able to enter the trade. We wait a little bit and price ends up coming all the way back down to the 0.88 level. Considering all the steps were met perfectly, we enter the trade, set our take profit at the top of the move, then set our stop loss right below the bottom of the move. And look what happens, it was a winning trade. Here's a short example. We have a downtrend, market from the top to the bottom with the Fibonacci tool. We then want price to come back up to the 0.5 to the 0.618 level. We wait a little bit and the very top of this candle's wick gets to this area, which we can still count it as long as it doesn't go past the area. Next, we need price to reverse back down to the 0.382 to the 0 level. We wait a little bit and price does just that. Now the price has completed most of the steps. We then have to wait for price to come back all the way up to the 0.88 level, which it does, so we enter the trade. Set our take profit at the low, then set our stop loss right above the high. Then look what happens, it was a winning trade. Now it's time to go over the backtest results. So we ended up testing this strategy with 77 trades. 48 were winners, 29 were losers, giving this a 62% win rate. Out of all the trades, the strategy profited 1,040%, which is absolutely insane. If you want to see the rest of the backtest results, like the time frame, consecutive wins, consecutive losses, I'll be leaving the rest of the backtest results in my Discord. I'll leave a link in the description. Here are some extra tips you can incorporate into the strategy to make it perform so much better. First tip, I found that if you take partial take profits at the 0.5 level, this strategy's win rate and the profit rate go way up. So I would recommend taking some profit off the table at the 0.5 level to guarantee those profits. The next tip I'm going to share is how to know exactly where to place your stop loss. If you incorporate this tip, your stop loss will be hit way less often and will save you from losing a ton of trades you shouldn't. Incorporate this video's stop loss strategy into this and it'll make this strategy perform so much better. Thanks for watching and I'll see you guys next time.